Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's figure out what is happening and what has happened and what we can expect moving forward and all of that good stuff. So as per usual, if you enjoy, don't forget to hit that like button. It does help a lot. This is not financial advice. I'm not a financial advisor. And of course, my membership section on YouTube is live. The link is down below for just $2.99 a month. You get access to my post updates throughout the day as Tesla is trading live every single day. Not literally, I mean, like as the market is trading and open, right? Every single day, technical analysis updates, options flow, there's thoughts, post updates, pretty much what you hear in these videos, just again, live, right? And fresh, pretty much as it comes and whatnot. But nonetheless, let's just jump right into it. Tesla closing the day in the green, actually 1.36% in the green, closing at 197.41, which unfortunately compared to the market is an underperformance, with QQQ up almost 3% on the day, obviously off the back of, well, NVIDIA earnings. Though NVIDIA earnings, yeah, it's up 16% right now on the day. So definitely off of that. Now you might be wondering, right? Some people might be kind of questioning, going like, okay, well, great. Well, why isn't Tesla up more? Like, how is Tesla only up 1.3%, right? Well, the reasoning for that, you can argue, is the fact that, well, other stocks reported earnings yesterday, and unfortunately, it was two EV companies that reported earnings yesterday that, honestly, in my opinion, are probably the main reason why our, you know, quote unquote rally today for Tesla is subpar, right? We had, of course, Lucid and Rivian reporting earnings yesterday. Obviously, both are very non-profitable EV companies, right? Lucid, one of which probably isn't even going to make it. Yeah, they reported earnings, and clearly, as I'm sure you can tell by these numbers over here, it didn't go so well. Lucid down 17%, Rivian down almost 26% on the day, which is pretty substantial. That is quite a move to the downside. So that is most likely what's bringing Tesla down. Now let's go into Tesla specifically. So the thing to note for Tesla that's interesting is the fact that the morning started off pretty atrociously. Actually, the morning I got very, like, really close to just, I don't know, not capitulating, but just the price action was very bad. Let's just say that in the morning, right? And we were arguably breaking out of this 65-minute wedge, right, that I was talking about, right? You can see the wicks, right? These two wicks right here was this morning. Two candles rather wicked well below, and it looked like the breakdown was about to occur. Now, obviously, the most important part to understand here is we never actually closed a candle below that. We just had the wicks, which then, of course, you know, as I'm sure you can see now, well, it recovered, right? So those are obviously bearish bear traps. And it was a false breakdown, which again, usually when you get false breakdowns or breakouts rather, it's very bad for that respective direction, and it's very good for the opposite direction. So in this case, because we had a false breakdown, well, that's usually a very good sign for bulls if you actually recover the way we did, because as I'm sure you can tell, we actually, you know, obviously had a very nice rally moving forward, right? So that's good to see. But the point I'm trying to make here is the fact that Tesla, for the most of the day, couldn't really decide if it's bullish or bearish, mainly because, you know, the market's rallying, like completely rallying, while you have Rivian and Lucid holding back, well, in this case, Tesla in the EV sector substantially, right? Again, they're literally crashing at this point. 25% in a day is like obscene. Anyway, so that's kind of what happened with, you know, Tesla today, right? That's the overall story, where, you know, couldn't really decide, and then finally it did decide, and actually, you know, got a little bit of rally going. Now, the good thing about this rally that we did get going is, well, there's two really, actually maybe even three really good things. First, on the 65-minute chart, well, we had a false breakdown, rally back up over it, right? Run back above 194, which is an important level. We talked about it before. If we zoom out all the way here, that's where we bounced off all the way back here. And on top of that, we also broke out of this wedge, this, you know, potentially arguably bullish wedge on this candle right here. Now, what happens next obviously is the question. Now, there's two things that can happen, right? One of which is, of course, well, the first thing is we just come down. We come down to about 195, let's say maybe even early tomorrow, and we retest this breakout. And then from there, assuming it's successful, which I expect it to be, we continue our way back up. So for instance, it'll look something like this, right? So we pretty much go down like this, and then we bounce off successfully, and then we get the retest, and we, in my opinion, as well, we finally start making our way to that gap fill at about 207, 210-ish dollars per share, right? The earnings gap, of course. That's option one. Option two is, well, we just completely rally from here. We just go more or less parabolic from here. And the reason for that is, well, there's a couple of reasons. Number one, options flow is very bullish. A lot of options flow coming in for this Friday as well, like literally tomorrow. There was one really bullish one over here, 1.1 million call came in, 187 call above the ask, 1.1 million for tomorrow. Someone literally bet $1.1 million on a 1 day to expire, or I guess like 1.5 day to expire, if you will, because, you know, it came in at noon today. So 1.5 day to expire at noon today. What price was Tesla at around noon today? Let's take a quick look over here so we can get an idea as to when that whale entered. It entered at 12, what is that? 09? Yeah, 1209 it says. Pretty much right here. They entered right around here, and you know, so far it's been a pretty decent move, right? From 1209 is roughly when they entered, which is right here. So we'll go off from this candle, and you know, Tesla, arguably, if they sold at the top, you know, up about 1.2%, right? If they're still holding, it's up about 1% from when they got in. But, you know, there's also a chance that they're still holding. And there's, again, it's not just that. There's a lot of overall options flow coming in for Tesla. Very bullish options flow coming in. A lot of it was, some of it was for tomorrow, right? But there's a decent portion of it coming in for next Friday, right? A lot of bullish flow coming in for next Friday. So I definitely think Tesla is looking pretty primed here. Like, it's looking good. It's looking solid, right? It's a breakout on the 65-minute chart. And there's a couple other things we'll talk about, right? Which is looking good. Options flow is looking very bullish for tomorrow and especially for next week's Friday, which is very good. We had the MACD crossover on the 65-minute chart, very nice as well. RSI is looking pretty healthy right now. It's looking like a, you know, like a strong respective RSI, which is nice to see as well, right? We have the daily, which is pretty important as we're again holding the channel. We had a false breakdown on the daily, obviously as well, below this rising channel, which is bullish, right? Especially with this kind of recovery, which is nice to see, right? We also have probably the more important thing, arguably, is the fact that, well, we actually did close back above the 21 EMA. You can see this yellow line right here, which was at 196.87. We closed, obviously, higher than that, where we closed at 197.41. So we closed, you know, respectively above it. Not incredibly, like, for instance, like this candle was, but pretty good, right? We're definitely showing some nice strength here. If we go over to the daily chart, which we're already at, and we open up this right here, you can see this indicator, which is that squeeze indicator, right? As I said before, right, when we were all the way up here trading around the 240s, which just seems like a year ago now, you know, we were going sideways, and I was talking about how we're squeezing and we're squeezing. Then we did start showing directions to the downside. Unfortunately, the squeeze is gonna, you know, unfortunately start going to the downside. And well, it absolutely did. We pretty much did squeeze, unfortunately, to the downside pretty substantially. Finally broke that resistance, kind of went sideways, set up an inverted head and shoulders, broke above it. Now we broke above the 21 EMA, came down to retest the inverted head and shoulders, and so far looking pretty decent, right? But on top of that, we have a new squeeze indicator showing up right here on the daily rather, right? With 3 red circles so far. The bars are still going up, similar to what happened back here when we started to squeeze to the downside. So signaling, again, not confirmed, but signaling the fact that the squeeze is building, and potentially, more likely than not at least, looking like it wants to squeeze this time to the upside, which in my opinion wouldn't be too surprising. Tesla finally decides to follow this market on this parabolic rally that it's off to. But as I'm sure you can all guess, Tesla is kind of a, you know, in its own little world. It kind of does it when it really wants to. It doesn't usually follow the market. That's why when a lot of people are kind of saying things like, oh, but the market's at all-time highs and Tesla is just falling. Like, what happens when the market finally decides to correct, right? What's going to happen to Tesla? Well, yeah, that's, you know, potentially not a good sign, obviously, right? That definitely can affect Tesla. But like I said many, many times, and I'll continue saying that many, many times, Tesla has just been doing its own thing for a long time. Like, it doesn't always follow the market. As an example is right here. The market was rocketing, Tesla was falling. There you go, right? That right there is an example of Tesla just not following the market. So keep that in mind, right? Tesla doesn't always follow the market. Sometimes it really is just in its own little world, and it really just does what it wants when it wants, right? It's like its own little index. Sometimes it feels like. So just keep that in mind, right? It is its own little beast. So for better or for worse, of course, right? So just keep that in mind, right? But those are the main things I'm looking at right now. Those are probably the most important aspects of the, you know, of the chart, if you will, that I'm eyeballing right now. Again, to make it really very simple, as long as we're inside this channel and we haven't closed the candle below that. So for instance, we, you know, came down below, but we didn't close the candle. So as long as we don't close the candle below this channel right here, which tomorrow that will be pretty much anywhere between like 194 to 195, like that's the most important price range to hold tomorrow, which again, if we do come down there to retest potentially this breakout right here, that would be roughly where we would come down to, but you know, about that 195-ish level, which gives us a little bit of wiggle room down to about 194 to hold the overall channel as well. So, you know, it is possible, but keep that in mind, right? As long as we're within this channel, technically Tesla is bullish and it's looking pretty solid. And I think the move up to the gap fill is, you know, imminent. I really do think it's imminent. I really do think it's going to happen as long as this channel holds. And again, now that we had a strong move today, a little bit weak compared to the market, but still recovering, breaking above certain levels that are important to break above, such as, for instance, breaking out of this potential, or not potential, this little pattern that we were in, the daily chart closing above the 21 EMA, right? Things like that is a nice thing to see. And yeah, I think it's looking pretty solid. So we'll see how this plays out tomorrow. I wouldn't be surprised if tomorrow is looking pretty decent as well, right? I wouldn't be surprised if tomorrow we, you know, potentially start looking for a move to the upside. But I personally think the move to the gap fill is most likely going to be next week, though I'm very happy with it being tomorrow as well. But I do think it is around the corner, and I would be surprised if we do not get at the very least a gap fill to around, again, the 207 to 210 level as early as tomorrow, but as late as probably sometime next week. And then from there, of course, we will overall revisit and see how it actually plays out. Because one thing to note that you know, that you shouldn't ignore, right, is the fact that this little channel that we're in, this rising channel, well, it looks like a bit of a bear flag, does it not, right? I mean, if this line right here that we did break out of, right, just pretend this is the pole just for demonstrational purposes, right? But this arguably is the bear flag pole, this one right here, this orange line. And this little channel, this rising channel that we find ourselves in as of right now, can be the bear flag, right? For instance, if we take the Fibonacci, we go from the swing high to what arguably, not arguably, but, you know, pretty convincingly now, I would argue, is the fact that it is, you know, the swing low down over here at 177 roughly that we fell to. Well, you can see there's some pretty important levels. 0.382 is sitting right at that gap fill, sitting at pretty much exactly 209. So that's interesting, right? So we have that level to pay attention to, which again is right at that gap fill. So maybe that's going to be where we reject and move down even lower. That is a possibility, right? If that happens, that's a pretty disappointing performance from Tesla, and really shows that it really is really weak right now. But there's a potential that we move up to 0.5 level, which is the 220 level, maybe even as high as, like I said, 230, which is where that 200-day moving average is. And, you know, we could potentially retest that, right? So in my opinion, one of these three levels should hit. At the very least, we should get the gap fill, which is 209, which is that 0.382 Fibonacci level, right? Which is the retracement from this massive fall. But yeah, this can be an overall massive bear trap, bear flag. That is a possibility. So, you know, take that into account. Now, if let's say we do come up to about this 220 level, technically it is possible that we come up to 220 by next Friday. Like, that is not impossible, because if you look at this overall channel, as long as we're zigzagging within this channel, which so far we are, right? And if let's just increase this channel, the lines of the channel a little bit longer, so we just, you know, get a more room to play with here. Right, if you look at it like this, and let's say we do zigzag, right, and let's say we do come up to the 0.5 level, which is usually my favorite retracement level, right, which is 220, which is where the 200 moving average is on the weekly chart. We talked about that many times, right? We'll take a look at it one more time here. This green line right here, roughly where the 21 EMA is on the weekly as well. So not impossible to go to 220, truly not impossible. But with that being said, you know, that is a 0.5 level, and as long as we remain within this ascending channel, that is leaving the room for that to happen by, you can see here, March 1st, right? As I go up to this part of the channel all the way up here, that is potentially at March 1st. So there is a potential that we essentially just go from here and make a potentially a decently parabolic run up to about 220, which is about a 10% move from here, right? So it can look something like this, for instance, right? We can move up maybe even tomorrow or like Monday, right? All the way up to this gap fill, come back down, retest the, what's it called? The bottom of the channel one more time. And then from there, rally back up even further to the 0.5 Fibonacci retracement level, which is 220, which is where the 21 EMA and the 200 moving average on the weekly are. And then from there, we retrace back down, and I think we can get a pretty substantial fall. Honestly, potentially to even look for a, you know, a potential double bottom situation like this. Like, this potential situation can absolutely unfold. So I'm still very optimistically cautious here. I still think Tesla short term, very short term, is bullish, but slightly longer than that, you know, we'll have to see. We'll have to see how this plays out, because there is still a possibility of something like this to occur. So we'll see. But all in all, that's kind of what I'm seeing right now and what I am expecting. So with all that being said and done, thank you so much for watching. And as usual, I'll see you tomorrow. Peace.